Futures on US stock indexes tumbled on Monday as a result of a shock slump in oil prices. Besides, investors are braced for another series of downbeat corporate earnings reports from US companies for the first quarter. At the same time, safe haven assets are trading under modest demand. The US dollar index is drifting higher. Earlier, the US stock market developed a rally in response to stimulus measures introduced by the White House and the central bank. Investors hoped that such measures would contain the coronavirus spread. Now the dynamics of the US equities are driven by the prospects of reopening the US economy that was announced by Donald Trump. Investors are keeping closer tabs on corporate reports, awaiting any hints that the US economy is picking up steam. However, restrictive measures are still valid. The US government has not passed a bill on the financial aid for small businesses which have been hit by the coronavirus. Citing Republican leader in the United States House of Representatives, Kevin McCarthy, the Democrats are still obstinate. Today, markets are wind down by falling oil quotes. Wall Street is trading in the red. Futures on the Dow Jones shed over 2%. North American grades went into a tailspin in the evening trade. WTI tanked more than 40% to under $11 a barrel, the lowest level since March 4th, 1999. There are rumors that some American oil grades plummeted as low as $2 a barrel. One of the reasons behind the crater in the US crude prices is a lack of spare capacity in oil inventories despite contraction in drilling activity. May futures contracts for WTI expire on Tuesday, but June contracts were trading at $22.70 in the New York session, having shed 9%. When a futures contract expires, its price usually coincides with spot prices. Meanwhile, the US dollar is losing its appeal as traders are anticipating the European Union summit to take place later this week. The agenda is devoted to the measures against the coronavirus-driven crisis. This event is sure to take center stage this week. Today, the US dollar index is again testing 100 points, but it failed to conquer this level. The index is trading slightly higher at near 99.80. The USD pair is trading with a mixed dynamic. Earlier today, the pair climbed above 1.41 and retraced to 1.4050. The US currency is losing its grip, and commodity currencies have been affected by a slump in oil prices today. On the whole, the technical picture is in the loony's favor. If the USD pair holds below the level of 1.4080, the price could decline to 1.38. That's all for today. We keep monitoring the financial market situation. Subscribe to our channel and keep abreast of the latest events. See you soon.